the FTSE's cheap and gold is relatively expensive. So you had the 50s and the 60s bull market, and then again, you had the 80s and the 90s bull market. So basically, you want to be out of the FTSE, and you want to be sitting in gold, waiting to get to the bottom of the cycle, in which case you get rid of your gold and then you buy the FTSE again. And what I'm talking about for gold also applies for silver, but you also have to factor in this gold-silver ratio in order to get a true picture of what's happening financially and how to position your portfolio accordingly. Now, I just want to quickly do a couple more charts before wrapping up. This is M3. This is the total quantity of money, total quantity of dollars, and these are the annual growth rates. And this, to me, is the most important chart of them all. You know, I said we can project purchasing power by waiting for the Dow to get back down to 1 or 2 ounces, and then you buy the Dow. You sell your gold and you buy the Dow. The question is, what is the Dow going to be, and what is gold going to be at that moment in time? We can't really predict. Is it going to be 10,000 on the Dow and 10,000 on gold? Or are we going to see a massive deflation where it's 1,000 on the Dow and 1,000 on gold? What this chart is basically doing is giving us a roadmap as to what to expect down the road. And you can see in the 1970s we had double-digit rates of growth, and as a consequence we had double-digit rates of dollar inflation. When Volcker came into the Federal Reserve and was given the mandate to clamp down on the inflation that was wreaking havoc through the economy, he did what he had to do. He slowly ushered in a policy of disinflation by reducing annual growth rates in M3. Greenspan followed that policy all the way until September of 1992, where by the traditional definition of deflation, you actually had M3 in September of 92 less than M3 in September of 1991. That's deflation, the decrease in the quantity of money. Now, that moment in time is significant because it coincides with Black Wednesday, George Soros breaking the Bank of England. Because of the size of the U.S. economy and the fact that the U.S. dollar is the world's reserve currency, the disinflationary policies of the American Central Bank were being exported to the rest of the world. Britain and Italy had enough. They broke away from the exchange rate mechanism in place, started ushering in a policy of reflation. It was a wake-up call for Greenspan, and he reflated throughout the 1990s. But this time around, this reflation went into stocks. It didn't go into tangibles like it did in the 1970s. And then from the peak in 2000, we had a flight from the dollar. Now, I use that term purposefully because the demand for the dollar, just like the demand for gold and silver, is really the key element. In the 1980s, during the disinflation engineered by Volcker, the dollar was actually rising. But in the 2000s, in this decline in M3 growth rates, you actually had the dollar falling relative to other major currencies of the world. And the reason why that was occurring is that the demand for the dollar was falling more rapidly than any contractions in the growth rate of money. So you had, and the reason why we know you can't measure demand, but the reason why we know demand was falling, aside from this evidence, is that you pick up the paper in the morning and read that, Warren Buffett was diversifying out of the dollars, or the Bank of Italy was diversifying, or Bank of Sweden, or any one of a number of central banks were diversifying out of the dollar, which was implying that the demand for the dollar was falling at that moment in time. So just like the demand is the key issue on the currencies, the demand is also the key issue on money itself. Now, this chart, the blue line here, actually stops in March 2006. And the reason why it stops there is the Fed no longer reported M3. They said it was no longer important, even though the ECB and the Bank of England said it continued to be an important element or important tool in setting monetary policy. I wrote at the time that the reason why they stopped reporting M3 is the Fed didn't want you to know what's coming. And here's, in fact, what came. We're seeing tremendous growth in the dollar money supply in the United States. And ultimately, this is what I think is leading to and going to lead to the ultimate collapse of the dollar, just like every other fiat currency before it. I mentioned before, when there are no external standards on what the central bank can do, the central bank can monetize anything. I brought a couple of charts that a friend of mine by the name of Chris Puplava, you might know his dad's site, financialsense.com. This is not an error. This is the actual year-to-year growth rate in Federal Reserve Bank balance sheet. That line going straight up, they call it a hockey stick because you have the bottom and then it goes straight up. That's what's happening right now in the Federal Reserve. You have 300 years of history of central banking from the formation of the Bank of England in 1694 to the present, and the Federal Reserve is throwing away the rule book. And I think the implications for throwing away the rule book are quite severe. This is why Volcker has been such a critic in the United States, if you've been seeing his comments in the media about what's happening presently in the Federal Reserve. And this is the actual increase in Federal Reserve assets. All of this is highly, highly inflationary. The Federal Reserve can essentially monetize anything it wants, and it has a view that it will monetize anything. You know, Bernanke's nickname is Helicopter Ben because before he became a Fed governor, he was talking about to prevent a deflation, he would drop $100 bills from helicopters, to inflate the economy. Well, Chris was saying he's long past the helicopters. He's now dropping them from B-52s, and you got to believe that he's right. I wanted to share this chart with you as well. There's lots happened in silver over the past couple of months. This is a spot silver price in terms of British pounds. We've basically come down to the trend line, the same trend line that we sat on in 2003, 2004, and 2005. Here we are again. My view is that this trend line is going to hold. The uptrend channel is going to continue, and eventually we're going to go to new record high prices in terms of the British pound. It's just a question of patience. It's just a question of watching events unfold day to day. Lastly, because this is a gold mining stock conference, I've got 3 charts. This one I gave to a conference here in London back in May, and this is the XAU index. The XAU is a leading index of mining stocks in the United States. And just like I looked at the Dow and the FTSE in terms of weights of gold, this is looking at this XAU index of mining stocks in terms of weights of gold. And you can see that when you get up to about 10 gold grams to buy the XAU is expensive and gold is relatively cheap. And similarly, when you get down to 6, you want to be buying the XAU because historically it's saying that the product produced by the mining companies is cheap relative, it's expensive relative to the stocks themselves when you're at 6 gold grams or less. Anyway, you can see every time you get down to around 6 gold grams, has been a very good buying area. And my expectation was that downtrend line was probably going to be taken out before we reached the end of the year. Well, it didn't happen that way. This is what that same chart was when I gave a presentation in Toronto in the beginning of October. And this is what the chart was, last week. So there are a couple of messages actually from this chart, and I'll conclude with these 2. First of all, when it comes to markets, anything can happen. And this is living proof. But secondly, when it comes to the resource stocks, they've never been more undervalued. They've never been a better bargain than they are today. Ladies and gentlemen, thank you very much.
James, thank you for a very fascinating talk. Because we have some time on our side, ladies and gentlemen, we've got time for 3 quick questions from James. I'll take one from the back, one from the left, and one from the right. Is there a question for James from the back, first of all? We'll come to you in a moment, sir. Gentleman right at the back. I'll bring over the mic, don't worry. Keeps me fit, if nothing else. Lovely, thank you.
By the way, this is my email address if you want to contact me, and the website where I write periodic alerts, which you may find of interest, include some of these charts that I've been showing.
You mentioned about Warren Buffett buying silver, I think, in the late 1990s, but I'd be interested to know, does he actually still hold silver? And if he doesn't, why did he dispose of it?
Yeah, there have been a lot of rumors about this. He bought the silver in 1996. It was reported in February of 1997. And a couple of years later, there was some very unusual activity in the silver market, and I sort of surmised that, Warren Buffett was actually selling his silver. And he did sell the silver. Now, there are a number of reasons that are out there. He's never really said for himself, other than that he bought it and sold it too early. And, clearly he did, because he averaged in at I think it was $4.65, and he sold out when it was $8. The rumor is, and it's the more spicy one, so I'll share that one with you, that this was a time when AIG and Warren Buffett's company, General Reinsurance, were under investigation by federal investigators. And the rumor is that there was a deal that if he sold his silver hoard, the investigation would stop below Warren Buffett, and that he would not be involved in any investigation of illegal dealings between General Re and AIG. Whether that's true or not, I don't know, but the timing works. And the other issue is that, and again, these are just rumors. I don't know if there's any truth to them or not. And don't accuse me of passing on rumors. But you asked the question. I'm just telling you, what my perspective is that there's when he bought Salomon Brothers back in the early 1990s, he worked very closely with the government agencies then to make sure that Salomon survived. It subsequently was acquired by Citibank. So he says he sold too early. Why he sold too early, we don't really know.
The gentleman here, I think you had your hand. I'll just give you the mic.
No questions on the silver cartel or manipulating markets?
Okay.
I expect at least one of those.
Richard Hunt. James, 2 years ago in London, you said that regarding gold and silver ETFs...
This is what I was fearful of, somebody with a good memory.
You said that with the auditing of gold and silver ETFs, it was only necessary or a requirement to audit the certificates and not